Hey guys, we're chatting about the IPP today, the individual pension plan. A fantastic way if you're a business owner to pull a lot more money out tax-free from your corp. So we all know about the RRSP. How does that work, right? You contribute to an account, you get a tax deduction personally, and it effectively reduces your income. Now the thing with business owners is they're limited there. And if you are a business owner, the IPP could potentially be for you. Now it's not for everyone. Obviously, you need to own a business, you need to have spare cash flow, you need to be generally above 40 years of age, and ideally you have a high income, a high taxable T4 income. The higher the income, the more IPP contribution room you will get. So the way an IPP works is when you create the individual pension plan, you're effectively replacing your RRSP with that account. It becomes a new account, and that account then gets funded by your corporation or your business account. It's a way for the business to pull out more money than they would if they were just doing the RRSP contribution. Some examples can run anywhere from 1.5 times to even twice as more RRSP contribution room through the IPP. So how does it work? You set it up. Once it's structured, there is a rollover. All the RRSP assets move into this IPP account. The business will then also fund it, usually using a formula that's calculated by an accounting or an actuarial firm. They will calculate it, and then you start with a huge lump sum. So that becomes an expense for the corporation. So that's the neat thing, is that you can then reduce your actual profits for the corp, and you can maybe potentially even reduce your tax bracket for the corp while doing so. So you take the money out of the corp, you put it into a personal account. No matter what happens with the corp, at some day maybe you sell the company, maybe whatever, you move on, you will have that bucket of assets that effectively should be twice or even 3 times as large as an RRSP. That IPP will then fund your retirement for the rest of your life. You could also add other important and connected people. You could add a spouse, you could add partners in an IPP, you could add your kids in an IPP if they are working for the company. So very, very unique. Very few people know about the IPP. A lot of people would be a perfect fit for an IPP. They just don't know about it. They've never heard about it. So there's a lot of moving parts of the IPP. It's not simple, but ballpark. Main factors. Are you 40 or older? Are you high income tax bracket? Do you have a corp? And does the corp have spare disposable income? If answered yes to all those questions, and if you want to retire richer, you should consider the IPP. That's it for today. Thanks, folks. And remember, like the video, share it, and please give us your comments. We'd love to hear from you.